Hello and welcome back. This is Christopher Aaron at the iGold Advisor channel. It is May 8th, 2024. I hope you are well. I want to do something very different this time and provide more of an educational video for investors who are new or who want a refreshed perspective on how to identify winning silver and gold miners. There is a secret that you should know about if you are going to be investing in the silver and gold miners. Not a lot of people know about this, but this is one of the most important things to look at when you're trying to separate the good companies from the poor companies. All right, let's get into it. Make sure to hit the subscribe button and the bell icon to be notified when these videos come out on YouTube. If you would like to give it a thumbs up, I would very much appreciate that. Thank you. And make sure to subscribe to our Twitter feed for free at iGlobalGold, because sometimes I post things there during the middle of the week when I don't have time to post here on YouTube. Okay, our legal disclaimer. One moment. Now, let's look at why this is important. So let's go back to the last cycle from 2005 to 2011 in the precious metals. And let's say that you were bullish on the precious metals and you were saying, I already have enough physical silver. I want to try to leverage that by owning some of the silver miners. And so you said, okay, I'm going to put some of those funds into the silver miners. And just look at the relative performance here. When we talk about silver here in the middle in green, if you invested in a strong silver mining company during this period of time, look, you achieved almost over triple the gain as in silver itself by investing in Wheaton Precious Metals, which is a silver streaming company. However, if you chose the wrong company and you invested in core mining during the exact same period of time, as a net sum, you barely got to even. So imagine, not only did you not make a gain, but you lost the opportunity gain in silver itself, and then you lost the opportunity gain for the incredible profits in Wheaton Precious Metals. So it absolutely does matter which silver miners you are investing in this cycle. So let's go to the secret. How to identify these strong miners. The secret is called relative strength. Okay, what is relative strength? So what you want to do is start with the major sector averages. In the case for silver, we're talking about the SIL fund, the SIL, which owns a basket of about 30 different silver miners. So if you were to buy the SIL, you're going to get some good companies, some poor companies, and a mix of everything, right? Everything in the middle. But this is our average. This gives us a sense of what the entire sector is doing as a whole. So what we want to pay attention to are the major lows. The major lows that were set here in January of 2016. This is our first major low. Then the major low that was set in March of 2020 during the coronavirus panic. That's our second major low. And then our third major low is right here in August of 2022. That's the bear market low following the silver squeeze in 2021. Okay, so we have three major lows. These are the important points to pay attention to. And notice how, just slightly, the coronavirus low was higher than the low from January of 2016. This is the key point. Higher lows, okay? And then notice how the low from 2022 was higher than the coronavirus low. Once again, higher lows. That is the key. All right, this is how the overall sector performed, the average of 30 different silver miners, some good ones and some bad ones. So now, let's keep that same chart right up here on the top. This is how the overall sector performed. And what we're going to do is check out Silver Company B. Now, I've blocked the name of this company. Here's why. Look at silver company B and pay attention to this relative low right here in January 2016. That matches up with this low right here on the sill. And notice how from January of 2016 through the coronavirus bottom, this silver company B made a lower low, not a higher low like the overall sector did, but this particular company, something negative has been going on in this company, and so it made a lower low compared to the overall sector. And then fast forward again to this low in August of 2022, and notice how for this silver mining company B, it once again made a lower low. So this is a company that fails. It fails in the relative strength test, and there is no need to be investing in this company because there are many better companies out there that are more worthy of your investment dollars and also that will provide you with better returns over the coming cycle as silver bullion itself moves higher. There's no need to mess with the poor companies, okay? So silver company B gets a big X because it fails that relative strength test. Now, let's switch over here and look at silver company A. Once again, I'm not going to give the name of this, but you can see it's a silver company here that trades on the Toronto Stock Exchange. So once again, pay attention to these relative lows. And notice how for silver company A, in fact, it is making higher and higher lows as it should, showing you that this is a strong relative strength company. This is a company that passes that test, and this is a company that we want to keep on our radar screen for investing to try to leverage the gains in silver. Now, as a backdrop here for one moment, what are the reasons that a company will make higher lows like this compared to that former company we were looking at, silver company B, that was making lower lows? Well, the reason that a company will be making lower lows, in fact, there are many reasons. As I often say, there are infinite reasons that impact the fundamentals, which then play into the chart. But many of the common reasons are A, they're diluting their shares too much. They're issuing too many shares. B, they have poor performance on their mines. C, their drill results have been poor, and so they have not got good grades of silver when they're exploring for new silver, right? These are three of the most common ones. But what I always say, the philosophy of this channel, what makes this channel different from every other channel out there, is we place the bottom line in how the company is performing. We don't want to waste the next 3 weeks talking about all the reasons why a company is underperforming. We want to talk about the bottom line, which is this a strong company? In the case of silver company A, it is. Or if we were to rewind here for 1 second, silver company B, no, this is not a strong company. So this is a brief lesson on the power of relative strength. It is these companies that show positive relative strength that we are going to be buying, because look at this. Just to get back to the former peak here in 2020, this silver company A would need to rise 200% at current levels, and I think it is going to do that. So this is a company that we will be buying shares in over the coming weeks. This has been a lesson on relative strength. I suggest that you, for your own investments, go back in the history of all the companies that you're investing in and do the analysis. Pull up those 10-year charts for all the companies and make sure that they pass the relative strength test. If not, it means you are in the poor relative strength companies. And like we saw at the beginning of this video, it is possible for you to be right on the price of silver, but to have a poor relative strength company that does not go up at all during this cycle. As we saw from the 2005 to 2011 example, the difference with core metals, which had zero gains at all, compared to the strong company that rose over 1,000%. So you either need to do this work yourself, or if you would like to learn about that silver company that we are about to invest in here, consider joining us in Precious Metals Intelligence Plus. You receive all of the exact open market signals that we are using here. The exact moment that we buy these silver miners, you receive a flash update to your inbox with the research report and the reasons why we are buying it. You also receive notices when we sell, because it's not enough to just know when we're going to buy. What about when it's time to take profits off the table? That all goes to you in Precious Metals Intelligence Plus. If you're a higher net worth investor, you should understand the power of private placements. We just looked at how silver mining company B was underperforming and how silver mining company A has that potential to rise 200% just to get back to its 2020 peak, which I expect that it will. And then basically you can nearly double those gains if you invest with us in elite private placements. Remember, this is for higher net worth investors. And the reason why you can achieve those superior gains is that you receive free warrants on every single investment that you make. And the warrants give you additional upside above and beyond the share price itself. Remember, you'll get a free subscription to our Precious Metals Intelligence Plus if you join us in the elite service. If you would like me to take a look at your individual silver miners and tell you whether or not they pass the relative strength test, if you don't have the ability or the time to do this on your own, depending on the number of holdings that you have in your portfolio, I suggest either a 30-minute or a 60-minute consultation. I can go in and give you the quick takeaway based on this technical screen that we run on all of our companies as to whether or not your silver miners pass the relative strength test. Remember, this is critical for achieving profits in the cycle that is ahead. You do not want to be owning the laggards, as we saw in that last cycle. You want to be owning the winning silver and gold stocks in this cycle. I will see you there.